Hello there everyone, welcome back to another video. So in today's video I'll be analyzing all my pairs, right? I'll be analyzing all my pairs, so stay tuned, and without any further waste of time, let's get it. So starting with the first pair, which is the pound, the GBPAUD. So I'll switch to line graph, identify my key levels, but what I do is to start with my highest high and my lowest low first. So these are my highest high and my lowest lows. Key level, this is a key level. This is a key level, right? This is also another key level. So seeing that now we have our pairs, our key levels, let's cater for any market structure. So what I'm seeing from my point of view, I'm seeing that the market was in a small bullish trend, right? The market was in a small bullish trend. Yes, the market was in a bullish trend. It broke out, came back to retest, and it might push to the downside. So moving on to the hourly time frame, you would see that okay, yes, the market has came back to retest, right? And I also want to cater for a zone here. This is the zone that I want to cater for, right? The zone for yes. So the market came back to retest, and we're seeing a small double top here, as you can see. So if we dig deeper to, okay, wait, we can find something. But if we dig deeper to the hourly time frame, you would see that yes, we are in some sort of a bullish trend, because I have my first touch here and here. So here, this is a small double bottom. A double top, as you can see, is a very small double bottom here. So this is what the market has done. The double top, draw cut, retest there. This is a retest, and we might see further out, or the market might complete the double bottom here, or it might give us a touch, and from there continue and invalidate our setup. So seeing that now this is our analysis, there's not really much else to see. So let's move on to another pair, which is the GBP Cad, right? So I've already analyzed this pair, and I'm already in a trade, right? I'm already in the trade. So this was the 4-hour time frame. I've identified my 4 key levels, as you can see, and we were in a bearish trend, right? We were in a bearish trend. So moving on to the hourly time frame, the market was around here. So I was catering for a bullish flag, which be something like this, bullish flag, seeing my zone and giving me double bottom breakout retest. That's where I would look for buys. Excuse me. But the market, as you can see, broke out of our zone, retested, and from there, wow, impulse to the downside, gave me this double bottom, and I basically entered my buy. Right, I've entered my buy. So here, as you can see, this is a small double bottom here. This small double bottom retested on this level and pushed to the upside. So what I did was, if the market breaks out and retest the zone, as you can see, this is where I would lock my profits just above entry to see whether is it gonna reject my setup, invalidate my setup, or is it gonna push to the upside, which this would confirm as my first take profit. So if the market was here, my profits would be locked just above this zone here to see whether is it gonna continue or is it gonna retest. And once it reaches here, I would lock below this key level to see whether is it also gonna push, break out of our zone, retest, and my target would be the touch of my resisting trend line, right? So we're currently in this trade. As you can see, we're in profits. So let's move to another pair, which is the pound yen, the GBPJPY. So this is we are currently in the GBPJPY market. So I'll start by identifying my lowest low and my highest high first, right? Then identify the rest of the key levels. Okay, this is the key level that I want to cater for, and this is also a key level that I want to cater for. Okay. So these are my 4 key levels. Switching back to candlesticks, you would see that now the market was in a bullish trend, broke out, retested, pushed to the upside, came back up to retest again twice, and as you can see, currently pushing to the downside. So moving on to the hourly time frame, let's see that now we are in some sort of a trend. We are in some sort of a trend here, which is an expanding type trend, right? An expanding type trend. So to cater for this zone, so this is my mind. So moving on to the 30-minute time frame, you would see that okay, the market was playing here, playing around here. It then impulsed to the downside and stopped somewhere, and is currently respecting the zone, right? So if you would look closely, you would see that this is a contraction type trend. Contraction type trend. This is a contraction type trend. So here, what we would look for is any breakout on any side. So if the market breaks to the upside, retest, we would look for buys, right? Then if the market breaks out to the downside, retest, we look for sells. So moving on to the 15 minutes to cater for our entries. There's also not really much to see here in the GBPJPY. So basically that's our like that's what we're waiting for, a breakout to either side, to the upside or to the downside. Then that's why we would cater for trades. And once the market breaks out to the either side, the market would have already given us some sort of a reversal pattern, or some sort of pattern that gave it confluence to break to that particular side. So let's move on to another pair, which is the GBP dollar, the GBP USD pair. So this is my highest high, and this is my previous low. Is so this is also a key level that I want to cater for. Also here, this might be key level. That might be a strong key level. So we would see that now the market is in a sell trend. The market is in a sell trend, as you can see. Wow, this large sell trend is selling massively, as you can see. The market was playing around this key level, was playing above this key level. It was contracting and ended up impulsing to the downside, right? So moving on to the hourly time frame. Okay, let's see. There's also not much to see here. There's not much we can cater for on the GBPUSD pair, right? So this was the retest trend. The market retested this key level via this bearish flag, and has impulsed to the downside, right? So now currently we're looking to see whether is the market gonna continue from there, since it's below our key level, our recent key level, or is gonna push back up. As you can see here, it reversed, and here it created a fake out. Also here, this weak rejection. So here we're looking to see whether is the market gonna give us reversal type pattern, which may either be an inverse head and shoulder or a double top. Then that's where we would cater for sells. And if it results in a fake out, it would give us continuation patterns to the upside. So moving on to the 30-minute time frame, there's also not much to see, but let's try to cater for something. So okay, this is what we okay, this is what I would cater for. This resisting trend line. I have my first touch here, my second touch here. So if the market pushes to the downside, crosses and retests, that's where I know that I have confluence. I have more confluence to enter buys to the upside. And if the market rejects my buy setup, it would give me a double bottom and a third touch on this resisting trend line, and also it would also be below my key level. That would also give me enough momentum to actually, or enough confidence to actually look to actually sell. So catering for sales, say that the market, let's say the market pushes to the upside, it gives me an inverse head and shoulder, right? And here at the right shoulder, that's where we would enter our sell, and probably close here, just here, just below this line, because this line is now the size of our trend line, right? It's the size of our trend line. So how we basically cater for our take profit. Yes, that's how we would cater for take profit. The size of this pattern or trend line, either we can cater for, if we sell here, this might be our take our first CP. But look, if I go deeper and if I do it again, and if the market, say now the market retests here at this zone here, so this would be our first take profit, and this would be our second take profit, right? If we scale in here, this would be our, okay, so let me be clear about this, right? So this would be our first take profit, and this would be our second take profit. That's all. And here, that's up to you if you would scale in, or you would just let the trades run from there. So let's see how we would cater for that. Our stop loss would be just above the touch of our inverse head and shoulders, just above. And our first take profit, as you can see, the risk to reward ratio is a good 1:4.8, and the second TP, the risk to reward ratio is a good 1:7.12. so that's basically what we're catering for on the GBP USD pair for sells. And for buys, we would either wait for the market to give us a double bottom here, push to the upside, give us a third touch, retest our key level. If it gives us our third touch and retests at our key level, giving us candlestick confirmation, that's where we would cater for a buy stop just above our third touch, because we save when we enter the buy stop rather than entering a buy in a market execution right away here, because the market might either push to the downside, stop you out before actually giving us another double bottom, and it might push to the upside, and therefore from there, that's when it would cater for our buys. So, or the market might either give us this large double bottom breakout retest. That's where we would enter that's where we would place our buy stop just above where the market reversed here, because that's where the market would impulse to the upside, and that's where it would validate our setup. So let's see on the 15-minute time frame. Okay, so now that we have our setup for the GBP USD, let's go to another pair, which is the US dollar CAD. Excuse me. So this is my lowest low, this is my lowest low, this is my previous high, same thing as the previous currency pair. So this is my key level. Okay, yes, yeah, that would be my key level. And also, wow, this one is messy, so it's kind of hard to cater for a key level. Okay, let's switch to candlesticks and see if we can cater. Okay, I see something. This would be our key level. This would be our key level here, because the market is rejected, created a fake out, rejected before it impulsed to the upside. As you can see here, rejected a small reversal before it actually pushed to the downside, and rejected again, pushed to the upside. Before it pushed to the upside, as you can see, it gave us these small weak rejections. They reversed a bit to gain enough momentum to actually impulse. Also here, it reversed, gave us the small breakout retest, pushed to the upside, and here it gave us this large weak rejection, which gives us a sign that it might continue further south. And also here it rejected before it pushed to the upside, created a fake out, and also here is a fake out. So this is a strong key level, right? Yes. So for any market structure, okay, this currency is messy, guys. So it's messy, but we're gonna try our best to cater for setups, to find setups. So yes, basically this is a fake out. I have my first touch here and my second touch here. This was a fake out, as you can see. Pushed it outside. I tricked a lot of traders thinking that it would sell, but it was a fake out, and continued to the upside with my buy trend. So on the hourly time frame, you would see that now before the market pushed to the downside, it had to cater for this nice bearish setup, this bearish trend, right? This bearish trend setup I'm gonna show you. So this is what the market had to do, right? This is what the market had to do before actually reversing to before the market actually had to push to the upside. So the market, as you can see here, gave us an inverse head and shoulder, fake out on our key level and a touch on our supporting trend line, breakout, retest. That's where you would have entered your buy, or you would have triggered, you would have placed a buy stop, and the market would have pushed to the upside with you, or you would have entered here before to cater for more profit, as you can see. But you also had to cater for this key level, right? This key level. So as you can see, it broke out of our key level, and the market is currently there. So if you would have entered here, once the market reaches here, you would have locked your profits below this zone, to see whether is it gonna reverse or is it gonna continue. And here most people, when they lock profits, right, they think that the market, they think about their profits. So if they lock here, they think that they're gonna gain small profits, this, that. No. So whenever you're into a trade, right, you're only catering for your risk management, right? You cater for your risk management. You make sure that you're using proper risk management. You're protecting your account. So if you entered here and you would have locked profit here when the market came to this key level, once the market stopped you out, it would have stopped you out in small profit, and that's better than a loss. That's better than nothing. So basically what your mindset would be is that, okay, let me enter a trade and see how the trade would go. Then if the trade stopped me out, it's okay, it's fine. It stopped me out in small profits, or a break even, or a small loss. So those should be your 3 rules when entering when you're in a trade, right? Either you exit the trade with small profits, big profits, break even, or a small loss. And you should never catch yourself in a big loss hoping that the market would turn into your favor. Hence I say your stop loss should be where it invalidates your setup. So if my stop loss were here, that's where I would know that the market, if the market came to the downside, push and retested this zone, that's where it would invalidate my setup. That's where it would be a fake out. So that's where I would close my sell manually than automatically when I placed it here, because that's where I know that if it breaks to the downside, retest my zone, that's where it would invalidate my setup. That's where it would show me that, okay, the market has faked out, has given me a fake out, so this setup is not valid. That's where I would close my trade manually in small losses rather than automatically when your stop loss is here. And that's where you would cater for your account, protecting your account, right? So let's move on. So let's see, this is a counter trend, right? This is a counter trend. This is a small trend on the hourly time frame, right? This is a small counter trend. Let's cater for this, right? So this is our counter trend. This is our bullish counter trend, right? So let's go to the 30-minute time frame. So on the 30-minute time frame, we're looking to see whether is the market gonna continue to the upside or is it gonna reverse, right? So if it reverses, it's gonna keep us reversal patterns. If it continues to the upside, it's gonna give us continuation pattern. So if the market from here gives us a double bottom, that's where we would enter our buy, and probably. So if the market behaves in this manner, gives us a double bottom, an increasing double bottom, just to give us our third touch, push to the upside, gives us our second bottom. That's where we would enter our buys, right? Because now this is also a fake out. That's one of your confluence. Fake out, an increasing double bottom, and also a touch on my supporting trend line of the counter trend line. Then that's where you would cater for your buy stop here, with your stop loss just below the touch of your double bottom, or just below the third touch of your trend line. And your take profit would be here, or your stop loss would be at the touch of the double bottom, right? But as you can see, the risk to reward ratio is not good. Like the minimum risk to reward ratio for me personally is a 1:1.5. So if this is less than 1:1.5, as you can see, it's 1:1.16. That's I wouldn't go for the trade, no matter how good the setup looks. I would not go for the trade because it doesn't satisfy me based on the risk to reward ratio, you know. So so if the market then decides to break out of our trend line, retest, give us a double top, that's where we would cater for sales. And we would place our sell stop either here or here to confirm our double bottom and our stop loss chart above here. Our stop loss would be just above this, in line with this week rejection. As you can see, this red key level just above this key level, because the market might also create weak rejections. And if you would have placed your stop loss here below the key level, it would have stopped you out before it continues into your direction. And basically this would be our first CP. That would be our first take profit. Or if the market pushes to the downside, breakout and retest our key level or our zone, that's where we would lock profits to break even. And this would be our first take profit. Then this would be our second take profit at this key level, right? So that's basically the setup for USDCAD, and let's move on to another pair, which is XAUUSD, also known as gold. So on gold, guys, gold is probably selling right now. As you can see, it's probably selling. So let's analyze gold and see and try to cater for any setups. This is the key level that I want to cater for. Okay, let me start by identifying my lowest low as high, right? So this is my lowest low. Excuse me. So this is my key level, right? This is my third key level, and this is my fourth key level. As you can see, I have 4 key levels. Switching back to candlesticks, and I would see the first thing I see is this downward trend line, right? This downward trend line. The market is currently selling. The market is showing us a bearish trend, right? A bearish trend. So now that we have our key levels and we have identified the overall movement, which is a sell, let's go to the hourly time frame to cater for other opportunities. So seeing that now gold is giving me this bearish trend line, as you can see, gold is currently breaking out of this, has broken out of this trend line, and I also want to cater for this right here. Okay, let me see. Wow, guys, sometimes it takes time to analyze, and it's hard to find setups. So that's why you analyze to find setups, not to just trade and make money. So yes, we are in a bearish trend, and the market is currently breaking out of our support zone, which is now becoming a resistance zone. So moving on to the 30-minute time frame, right, for I would have waited for a retest where the market broke out, but my second scenario is that if the market doesn't retest where it broke out, then it would push to the downside and retest my previous zone, which is this support and resistance zone here. As you can see, I catered it. As you can see, the market pushed to the downside, rejected also here, and here this is a small rejection to gain enough momentum to actually impulse, right? And also here it rejected via this inverse head and shoulder on gold. So right now the market is currently breaking out of our zone, so meaning that we should cater for sells. Yes, we should cater for sells. So now that we're catering for sells, I want to try and see if I can cater for this. I want to try and see if I can cater for this. No. Okay, I can leave this one. I can leave this trend. So excuse me. So now the market is breaking out of our zone, as you can see. So here we're waiting to see where is the market gonna reverse. The market gonna either push a bit, reverse, from there give us confirmation to sell, right? And basically what we should also cater for is this here. This would be our overall take profit, right? So if the market behaves exactly like this, say the market is now here at this arrow, I would either place a sell stop with my stop loss just below my zone. Take here, as you can see, also the risk to reward ratio is not good. So see now if I enter here where it actually retests here for to the outside. Stop loss just below zone should be the take profit. So yes, as you can see, the risk to reward ratio is a good 1:2.42. That's basically a good risk to reward ratio to cater for. Right, so if the market reaches my take profit, this is where I would lock my profits at this key level to see whether is the market gonna continue to touch supporting trend line or is it gonna reverse from there. If it reverses, it's gonna stop me out in profits. Right, that way I'm safe. So this is what I would cater for the setup on the gold pair, the XAUUSD pair. Right, so let's move to another pair, which is the US dollar, the USDZAR. Wow, this pair is volatile, guys. So let's get on with the analysis. So here I have my previous low. This is my lowest low. I mean my previous high. This is my lowest low. Right. So wow, this market is it's hard to see. It's hard to find. This is something here. So switching back to candlesticks. Wow. It's hard, guys. It's hard. When the market is messy, it's not easy finding setups. So as you can see, the market here broke out, retested, and from there shot up like a rocket. So there's nothing much to see. Let's move to a lower time frame, which is the hourly time frame. So on the hourly time frame, there's also not really much to see here. Wow. But let me try. So here, as you can see, the market gave us an inverted head and shoulder. It might also continue to the upside, or from it might give us fake out, and from there it might reverse. Or if it gives us a fake out, it's gonna give us this double top before it actually reverses to the downside, right? So currently, wow, there's not really much to see there. So let me try. Okay, so this is my supporting trend line, right? So now I'm looking to see whether the market is gonna, yes, I'm actually trying to identify the next market movement, right? So as you can see here, I have my premature double bottom. If the market sells from there, that's where I would cater. Sell, that would be my first take profit. That would be second take profit, right? So wow, here guys, yo, it's not easy. So okay, let's keep it this way, right? Let's keep it this way. Let's cater for our premature double bottom, right? And I also want to cater for this key level at these, right? I mean this zone, sorry. So yes, Now I'm waiting to see whether the market is gonna buy or sell. So if it buys, it would have to impulse, so my buy stop would be just above my zone. As you can see, I have these weak rejections that I'm catering for, and my stop loss would be just below my zone. And wow, I don't even know where my take profit would be, but let's calculate the size of this pattern. So basically my take profit somewhere there. As you can see, the risk to reward ratio is a good 1:1 1:3.63. So that's also a good risk to reward ratio, but let's not rush anything, and let's focus on the current moment. So as you can see, there's not really much to see on this pair, the US dollar, the USDZAR pair. Not really much to see. So wow. So we're gonna see what the market does. And you're gonna cater for every scenario that we come across. So let's move to another pair, which is the EURGBP pair. On the EURGBP pair, this is my high and it's my high. It's my highest high, it's my lowest low. This is my previous key levels. As you can see, the market to the downside rejected. Also here it rejected where it pushes and retests here on my key level, making it a strong key level. And also here it gave me a fake out, as you can see, and also here also a small fake out. So this is a strong key level, and this is another key level that I want to cater for, which is here, right? So here the market gave me a fake out, so here gave me this fake out. So this is my key. These are my 4 key levels. So catering for any market structure, I would see that we are in a buy trend, or the market is currently buying. You can see it is currently buying. If we move to a lower time frame, which is the hourly time frame, you see that before the market actually bought, it had to give us this trend, to give us this pattern. Again, a continuation pattern, broke out, retested twice, and from there to the upside. So here there's also not much to see, but I'm seeing something here. I'm seeing this premature double top, which is a reversal type pattern. So that's basically what we would cater for. Let's go to the 30-minute time frame. So yes, this is our premature double, but I mean our double top, sorry, our double top. So we would see whether the market is gonna break out, retest. Once it retests, that's where we're gonna cater for a sell trade and probably close our profits here, right? For the market, get this trend line. But I can't really cater for the support of the trend line. the resistance of the trend line. Yes, this is our supporting trend line. So if the market breaks out of our supporting trend line and retest, so here, this is the key, this is a zone that I want to cater for. This is a zone that I want to cater for. So if the market behaves in this manner, respects our setup, breaks out, retest, and that's where we either sell here or place our buy stop just below zone. Sell stop just below our zone. And once the market breaks out of our zone, it would activate our sell stop, and our overall take profit would be here, right? So that's basically the setup for the Euro GBP pair. Yes, that's the setup for Euro GBP. So let's move on to another pair, which is the pound ZAR, the GBP the GBPZAR, the GBPZAR. So let's try to find setups. So this is my lowest low, as you can see, and this is my highest high, right? So this is my previous key level. This is my previous key level, and this is also my previous key level. So if I switch back to candlesticks, you will see that the market was in a bearish trend. It broke out, retested here, and pushed to the upside impulsively. So focusing on the current market situation, so this is the zone that I want to cater for. I also want to cater for this. Right. So if I move to the hourly time frame, you would see that this is an expanding type, or this is like a triangle, some sort of a chart pattern. So I want to cater for a zone here, which is a very strong zone. So here the market rejected 3 times, first time, the second time, third time, before it actually broke out, retested, and pushed to the downside. So here, as you can see, if you look closely, you would see that there's a chart pattern that we're seeing, which is an inverse head and shoulder from the from the GBPZAR pair. So should the market break out, retest, that's where we would look for sells. But one thing that you would notice is that the US dollar to the ZAR and the GBP ZAR and the Euro ZAR pairs are similar, just like the US30 and the Nasdaq, they like similar. So if you're looking for sells on the GBP ZAR, you should also probably look for sells on the USDZAR or the EURZAR pair. So here, as you can see, it's showing us buys, but on the USDZAR pair we catered for sell. So also here we're seeing this inverse head and shoulder on the US dollar ZAR. So the market might actually break out of our zone, push to the upside, right, for buys. Then for sells, it might sell and give us our sell setup. So also here there's nothing that I see that I would cater for selling opportunities. So so if the market gives me buys would buy. But if the market sells, I would not sell because I'm not seeing any selling opportunity. Selling opportunities. So should the market break out a retest, I would then confirm to enter my buying positions. And should the market push to the upside, it would give me a third touch of this support, this resistance zone, and also my key level. So that would confirm my buy setup. So let's move to the 30-minute time frame to see more clearly what's happening. So I'm seeing this trend line. Market can either buy or sell. The market can it wants. So yes, let's move to another pair, which is the CAD yen, the CAD yen pair. So yes, this is the CAD yen pair, as you can see. This is my highest high. This is my lowest low. So this is also a key level that I want to cater for. This is also a key level that I want to cater for. So these are this is the playground of the market. So as you can see, we're currently in buys. Market is buying. So let's move to a lower time frame, which is the 1 hour time frame. So on the 1 hour time frame, I'm seeing this trend. This might be a bearish trend. So here we can either look for buys and sells. So this is the zone that I want to cater for. This is the zone that I want to cater for on the hourly time frame. Hence, we're seeing this premature bearish trend because it hasn't yet confirmed that it's a bearish flag. So if you look left, you'd see that it had to break reference. It became a supporting trend line, retested and shot to the upside, and completed the 90% rule, which means that it completed the 90% of the trend line. So also here we're seeing a bearish flag. So let's move to the 30-minute time frame. So on the 30-minute time frame, let me try to see whether I can cater for this. So this would be my counter trend line if the market breaks out of my bearish flag. If it confirms my bearish flag and breaks out of this zone, that's where I will cater for my counter trend line. Then if the market buys from there, I know that this is also a trend that I should cater for, which is within our bearish flag. So should the market buy, we're going to look for further buying opportunities. I'm going to buy here, close there, or should the market push to the upside, give me touch and a head and shoulders, reverse from there, further push to the upside, we would sell here and ride the trend for further selling profits. And also here, if the market does this, give us this head and shoulder, we enter a sell and probably close at our zone. And should the market break out retest, we would scale in and probably close when the market touches our counter support trend line. So that's basically the setup for CADJPY. And let's go to our last pair, which is the EURZAR pair. So as I said, guys, the EURZAR, the GBPZAR and USDZAR are similar pairs. So this is my highest high, and this is my lowest low. This is my previous key level that I want to twice is enough to consider a key level. So it's also a key level that I want to cater for. You can see the market rejected here, also here rejected. If I switch back to candlesticks, you would see weak rejections, and also here the market is currently at our key level. So as you can see, before the market actually side, it had to give itself setting set. Yes, it had to give me this sharp trend and also had to break out to the side. So now as you can see, look at this, look at this, look at this. This is like the same as the GBPZAR setup. So this is basically almost the same as the GBPCAD. Look at this, look at this. Then we go to GBPZAR. You would see that these are similar. Look at this. And if you see that this large weak rejection, you would also see it on the EURZAR pair. Get this weak rejection also. And it was also selling. So these pairs are like similar pairs. So if you're looking for buy on one of these pairs, you should look for buys on all of the pairs, on all the three pairs. So moving on to the hourly time frame, this is our setup. This is our trend, our hourly time frame setup. So there's also a key level that I want to cater for, which means a zone that I want to cater for. So the market here rejected, pushed to the downside, gave me a fake out, pushed to the upside, pushed to the downside, retested, confirmed this as a strong zone and pushed to the downside. And also here, actually to reverse gains enough to make a power move to break out of this zone. So also here, as you can see, look at this, the market to give me sell selling up actually buys, hence it had to give me break out of a test on this downward trend. So currently the market has completed our trend line, so let's remove these lines, right? So let's remove these lines and cater for our current price movement. So if I move to the 30-minute time frame, this is the setup that I'm seeing, which is also similar to all the other pair, all the USDZAR pair and the GBPZAR pair. So right, on the GBPZAR pair, we were looking for buys and sells. So if the market also buys, we're gonna look for opportunities. If the market sells, we are gonna sell opportunity. So how would you look for those opportunities? So should the market sell, or should the market give me a double bottom to confirm my sell? That's where I would sell. That's where I would cater for the overall sell, giving me this double top. And once the market retests here, that's where I'm gonna look for selling opportunities, because it's giving me, it's telling me that it's gaining enough momentum to actually break outside of this trend here, or it's telling me that it's gaining enough momentum to actually push to the downside, reverse. Or if the market buys, let me see how I would cater for buying opportunities. So if the market buys, it would then break out of my trend line, retest there. That's where I would look for buying opportunities, right? And I would possibly close. Wow, possibly close there. But obviously I would lock profits if that would be my overall take profit. Let me calculate the size of this trend. So yes, this would be my first CP would be here, and once the market is here, that's where I'm gonna lock profits. If I entered here, that's where I'm gonna lock profits, just here, just above entry, to cater for this overall movement. You can see this overall movement, as you can see. So this would be my first CP. But once the market reaches here, that's where I'm gonna either lock, because I would see that, okay, this is my take profit by the market actually behaving in like reversals. If the market behaves in this manner, push to the downside, rejects, push to the downside, reject, push to the downside, like something like that. So I would see that, okay, if the market doesn't retest here, then as long as we are above this key level, we're looking for buys. As you can see, the market bought. And also if the market doesn't retest here and choose to retest here, that's where we're gonna look for buys. And also if the market doesn't retest there, it would retest here. As you can see, once the market retested here, we're looking for further buys. So that's basically how I would cater for locking my profits if the market would respect my buy setup. If the market would respect my buy setup, right? If the market would respect my buy setup. So that's the end of the video, guys, and thank you for watching. those are all my pairs. I have like 11 pairs that I trade, 11 pairs that I stick to. So one advice I would give for currency pairs: do not change currency pairs, because you're losing trades on this pair, you're winning trades on that pair. Stick to those specific pairs, and I would say at least have 5 pairs, 3 to 5 pairs as a trader, and those pairs that you're gonna stick to, because if you stick to those pairs, the longer you stick to those pairs, the more you're gonna know how these pairs behave, and the more you're gonna be experienced when it comes to trading those pairs, rather than someone who rather than a beginner who just chooses this pair, which is a pair that you master. So stick to your own pairs, have at least 3 to 5 pairs. So I have like 11 pairs, and previously I had like 5. Yes, I had like 5, and I saw that, wow, there's also a time where you're gonna analyze and you won't find setups on all 5 pairs. So that's why I chose to add more pairs. And basically for me, I was more of like a scalp and a swing trader. So I had like swinging pairs, and I also have scalping pairs. So at that time I was like, no, you know what, I can't multitask. I can't swing and scalp at the same time. I only have to focus on one of them. So I chose scalping, as you can see with my previous videos. When I analyze, I start from a 4-hour time frame and enter at 15 minutes. So I decided that, you know what, let me just trade all of those pairs. So that's why I have like 11 pairs. So without any further waste of time, again, thank you for investing your time into this video. If you enjoyed, hit that like button. If you have any suggestions, if you have any questions, please leave them on the comment section below, and please subscribe if you like these content, which I will be sharing from now on. So without any further waste of time, I'll see you on the next video.